What's up traders, Tom here with another video. Today we'll be discussing something that I think is really alarming. We are starting to see scary house numbers similar to the GFC, bankruptcies everywhere without bailing from the government, trade tensions that would usually see the stock market fall, and a reoccurring event that has spelled something big for the last two crashes about to occur. Stay tuned. So if you've been enjoying our videos, please make sure to support us by subscribing and hitting that bell, and make sure to comment down below and let us know of any companies that you think are about to potentially become bankrupt so we can cover them on this channel and show everybody what we look at before these events occur. So I'd like to begin this video by talking about the current level of mortgages that are in COVID-19 forbearance plans, and that is 9%. We've also seen existing home sales plunge 17.8% in April, and of course there is worse on the way. To give you an idea of these numbers, look at this chart so we can see this drop off that happened during the mid-2000s, and then more importantly, the kind of lurching effects that happened during the GFC. So this is a huge number. It's already plunged a huge amount. We do know that in America, many problems, e.g. the GFC, was partially due to problems in the housing market. So it'll be interesting to see how this story unfolds, and we will be covering it on this channel. The next topic I want to talk about is bankruptcies and the systemic effect that bankruptcies are going to have on the S&P 500 technicals and also on the Dow and other markets. So we've seen JCPenney, J.Crew, Neiman Marcus, Gold's Gym, Pier 1, all these companies going bankrupt, and their latest victim, Hertz, a 100-year-old company that is now filed as of Friday for Chapter 1 bankruptcy. Basically, this particular company has gone from being the biggest to dead very, very quickly. And it does show in their share price, but at the same time, it is scary what we are seeing, because the systemic effects of a company like this going bankrupt is much more than just the company itself and, unfortunately, the people that lose their jobs. So, of course, the thing is, Hertz bought and leased most of its cars from General Motors and other car makers as well. Now, it won't be able to, and of course, that will hurt the automakers and all of their supply partners. So that's the thing. It has that supply partner effect where it goes out everywhere and hurts all of their cash flow. And we've talked on this channel, cash flow is the number one terrible thing to happen for companies, is the number one killer of companies. So Hertz filing for bankruptcy will now put pressure on them selling the fleet, putting in the market. All of the market cars will then drop. That will hurt dealers. That will hurt everybody. And it has that flow-on effect on cash flow. So we need to be aware that when we see one company go down, it's losing 5% chunks of income from all these other companies that is really doing the damage to the greater economy. So of course, despite the $484 billion loan program for small businesses, there's going to be a ton that fall over. We've mentioned this on the channel. There is a Harvard study out there, which I'll bring up again. I've done it on this channel, where basically about 57% of companies recover over a 3-year period to be back at earnings, but it takes them 3 years. Only about 17%, I think, actually recover fully. And then the rest of them either never recover back or they go bankrupt. So that's the thing. These small businesses are the lifeblood of America and the lifeblood of the economy. And you are going to see a huge amount of them start to fall over once the stimulus and the fiscal policies run out on them currently. Now, of course, right now in America, it's Memorial Day long weekend. And that means that we are about to see a bank holiday. And the importance of this is when we start to look at the S&P 500. So let's take a look at the S&P 500 and talk about some technicals that have happened before and that may happen again. So here we have the S&P 500 and we have it on the daily. And up above, we have the 200 moving average. And we mentioned this in a previous video, but I want to talk about how important this 200 moving average is, not just to what we've seen recently, but to the past history as well during crisis periods. So the 200 moving average acts as dynamic support and dynamic resistance, and you can see how price interacts with it for the first touches time and time again. In a previous video, I was talking about the amount of weeks coming off a bear bust that a bull trap or a bull move will generally move in. And we can see if we count these 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're in week 9 into the bull run coming off the bear bust. If we then scroll across and we take a look at the GFC, let's do that together now, we're going to see something very interesting that actually a viewer mentioned to me. And when I had a greater look at it across the board, I noticed something very, very interesting. So here is the beginning of the GFC. And we can then see the pickup, and we can see that it hit the 200 moving average and then sold off. Now, more importantly though, we've talked on this channel that this was a pretty large fib in terms of a very similar fib to Fibonacci level that we'd already seen before. But look at the date, 19th of May, going into the long weekend in terms of the Memorial Day weekend. The sell-off began to occur after that long weekend. Okay, that is interesting. That has happened almost the exact same way that we are currently seeing right now. And it even took around 10 weeks off the bear bust into the bull run. So they don't call it a bull run or a bull trap for any other reason other than it traps people's psychology. And there's a lot of new traders, remember, in the markets right now. Millennials are coming into the markets more than ever before, and many of them have not experienced a market crash. A lot of the viewers on this channel have said that, and they've also said that there's all these new people that have just never gone through anything. Now, I have definitely gone through the GFC, so I saw what happened there. I didn't go through the tech bust. I didn't go through the 87 bust, but I study them to have a conviction in what I'm doing. I need to have an idea of what I'm going to do, and I need to be convinced and stick with that plan. And I've always said, whether you're a bull or you're a bear on this channel, you must have a very good plan and then stick to your plan and believe in it, because otherwise you're just going to get in a trade, leave a trade, get out of a trade, take a loss, and you're just going to be currently wish-washy and just lose money to the brokers and lose money to everybody else. So you must have absolute confidence in whatever you're doing. So let's now take a look at the tech bust. So of course the tech bust started a little bit earlier, but notice there was a big sell-off followed by an incredible bull run. I'll state it again, an incredible bull run all the way from, guess what, April into May. And check out the date, 200 moving average, very close, similar to what we're seeing right now. 22nd of May, going into the weekend, sells off and makes a new low. So think about it this way. We have seen two busts fairly recently over the last couple of decades that have done the exact same thing with the exact same types of pull-ups, with the exact same timings, and it's uncanny. So I don't know if any other channels are talking about this. I probably don't think they are, but if they are, well done to them. I definitely thank the user for pulling it together in terms of saying, look at that 200 moving average. And then I basically just went and had a look at the dates and I went, wow, okay, it's also the same dates. So even I didn't know that until I've been covering this topic even more. And that's why you're always learning in the market. You're always learning new things. So very interesting, and we'll cover my technical analysis points on the DOW at the end of this video. Before we do that though, I want to talk about bankruptcies and why, if you're buying companies with poor cash flow or companies that were already doing poorly into this crisis, you should probably think again. So here we have GameStop, and GameStop, if you look at it, is a company that supposedly was doing well during 2012, 2013, and they sell physical games, and they're called EB games in several countries like Australia. I think in Canada they're called EB games as well. And look, physical media is definitely a medium that is dying. They've tried to reinvent their business, change all these things in their business, and I'm sure that they've done some good things, but realistically, they're a business that is eventually going to fail, most likely. It's going to be very hard to turn the ship around because during this crisis, what are people doing? Well, they're not going out and buying physical media, that's for sure. They're buying it online. They're changing their habits. So people have been actually buying the share. And I haven't been following it. I'm sure there's some earnings thing or something that'll look better. But to buy a share like this that already was losing millions and millions of dollars coming into this point, if you were losing coming into the crisis and your business was degrading, what makes you think that your business is going to do better? So this isn't one that I would say, oh, wow, I think that's a great 10-year investment or it's a great trade or anything. I'd just stay away from it. Why invest your hard-earned money in things that don't necessarily make sense or have bad cash flow? Remember, Hertz didn't start suffering yesterday. It started suffering years ago. It was failing years ago. The competitors were destroying it. So it's that kind of thing. They're the companies that are currently filing for bankruptcy, the companies that were already failing. There's other ones that are doing it. Tailored Brands, another one, absolute failure, possibly in bankruptcy. I haven't really, again, studied this particular one, but man, that is a massive Head and Shoulders, left shoulder head and right shoulder followed by a break. And, certainly is playing out more than ever before. But that is the kind of thing you don't want to be doing. Another one is LiQWYD. Now, I'm a big proponent of don't buy a stock that hasn't been on the stock market for 5 years. And I do this because I say, if a stock has been on the market for 5 years, then at least it's had several earnings where usually the skeletons get bought out of the closet. This one is a classic case of where the skeletons were in the closet, and then it turns out that actually the chairman has lied about the results, lied and exaggerated the revenue by 2.2 billion yuan. And then on top of that, now he's got Credit Suisse chasing him. So this stock is being delisted or it's going to die. I mean, I cannot see how LiQWYD gets through this with the amount of dodginess that is surrounding it. But even when we see tech stocks come into the NASDAQ, they've never performed well in the first couple of years. Well, not very often. They generally perform well on the hype and the FOMO. Then the real numbers come in. They don't perform well. Snap was another one of those that didn't perform well for quite a while. And then they will come good after time as they, if they're going to, as they build their business. And I was looking on the Robinhood popular, I think, stocks, and people are buying Groupon. People are buying all these things. And I understand that it's worthwhile looking at potential speculation, but I've always thought buy the companies that are doing well, that have strong cash flow, that have a real solid business behind them, and don't look too much at these bargain stocks. So just a word of warning, bargain stocks right now is not something that I would be looking at in the markets. So let's take a look at our technical analysis on the Dow. And I think the Dow is actually the key to the markets right now in terms of which one, in terms of indices, I would be looking at to give me a buy trigger or a sell trigger. So the Dow is stuck between a resistance of 25,000 and a support of 23,000. I'm using the Dow because the S&P 500 has been faking out every single time, and I believe that is because Wall Street is truly taking advantage of the retail herd and the retail traders that are in the market. You're seeing very slight kind of bullish momentum over levels. You're seeing a massive change in psychology between the retail herd when that little level is broken. And it's not breaking by much either. So I'm looking at the Dow as my kind of technical indicator to what's going to happen. Now, let's say if the market actually came down, broke through 23,000, usually it will go the range of this particular pattern, which will push it into 21,000. Now, if what was going to happen before happens again, and this is the S&P 500 and what happened in the S&P 500 that we saw, that would actually push the Dow potentially even further, all the way down to 18,000 and below. And that can only happen if you start to see so many things failing, because of course the Fed has literally pretty much supported the entire market. It's become them and a couple of rich billionaires market. But if they cannot support and they cannot, let's say, stop these bankruptcies and stop the systemic flow of what the bankruptcies are doing, or we see trade tensions, or we see all these types of things come into play, all of a sudden we are looking at a real bear case. So So I know I talk about bear case all the time on this channel, but really there's so many reasons why, and there's a good reason why so many people are looking at it, because things don't add up. And it's very interesting that this is around the time that things have not added up several times in the past. So if you're enjoying our videos, please make sure to subscribe and hit that bell. And of course, let us know in the comments down below any companies that you think could be potentially looking at bankruptcy, so we can put together a list. And I'd love to do a video just covering some of those to have a look at the similarities and maybe things that you can spot in the future for that type of case. As always, happy trading everybody, and we'll see you in the next video.